Hello, traders. It's Monday evening, September 4th. Market's closed. Let's take a quick look at our previous pick. I'm going to keep this video short. We'll take a look at our previous pick. We'll do some market analysis. We'll get ourselves set up for this week. CVNA. That was the last pick that I highlighted. It was a bullish pick. We had a nice market breakout, and we were waiting to see what was going to happen here. We had a few bearish picks that I also highlighted from previous videos. We had those queued up in case the market reversed and broke through this upward sloping trend line. But we also had a bullish pick just in case the market was able to break through that 50-day moving average. CVNA is up about 10% in the last 4 days. So you can see it's continued to push higher. I loved this breakout through the downward sloping trend line. We had really nice heavy volume. We had a compression breakout right in here as well, along with a long key bar. And you can see the follow through buying. So I still like CVNA. I think it's going to challenge this high right here at $55 or so. So it still looks like a decent long. The market, not really sure what to expect here. So let's do some market analysis. First of all, we've had a really nice market rally this year, but you can see lots of mixed overlapping candles. This is a 52-week high in here. Decent volume on the way up, but nothing to write home about. So always 3 steps forward, 2 steps back, 3 steps forward, 2 steps back type of pattern upward. Not super bullish, but the market was continuing to move higher. Well, it got a bit overextended here. We have a bearish engulfing candle. That was our warning sign. And then we also started to see the market sell off. So this is just some natural profit taking that we can expect. Nothing too overheated, lots of mixed overlapping candles. We drop down, establish a low, and now we've been able to bounce. This higher low double bottom led me to suspect that we were going to see a rally through the 50-day moving average, and we got that last week with a long green candle closing on its high, decent volume. Haven't really been able to rally beyond that point. Now we need to be careful, and this is a very important juncture, and I'm going to tell you exactly why. There are two scenarios that could play out. One is that we make a lower high double top, and that would come into play right in here. If the market can't advance, anyone who bought this bounce is going to get flushed out. We'd quickly take out the 50-day moving average, take out this upward sloping trend line, and test the 100-day moving average. That would be a lower high double top. There is one other scenario that can play out. We have a downward sloping trend line right here that was breached to the upside. We get a bullish flag formation and a new relative high. So we would break through this previous resistance and continue to push higher. And that would be supportive of this longer term bullish trend line that we have in place right now. The problem that I have with the market advancing right now, and again, this is not technically based, this is just based on my own analysis, is that we're heading into some seasonal weakness right now. August and September tend to be very, very weak months. Right now, we had the Fed. They've stated that they're going to be raising rates sometime this year, but the consensus is that it's not going to happen at the September meeting. But they still are in tightening mode, and they feel that they're not going to be able to ease up until they see some kind of slowdown in economic growth. Well, last Friday, we got a jobs number that was a little light. It was lower than expectations. 225 was the expected number. 225,000 came in at 187,000. Okay. Little bit of a pullback. Not dramatic, not horrible. That should have been a Goldilocks number. Not too hot, not too cold. We also had wages come down from a 0.4% increase during the month of July to a 0.2% increase in August. That's excellent because wages are the largest input cost for manufacturers. So that pullback in hourly wages should have also been really good news for the market. So it got exactly what it wanted. So it should have gone higher, right? Bad news is good news. Little easing on the inflation front. This is awesome. So what happened Friday? We get this rally up, was able to get through the high from Thursday. First 5 minute bar is a doji. This second 5 minute bar, that was the tell. Big sell off. Okay, so right out of the gate, as a day trader, we're not going to have a go go, gap and go rally where boom, 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 we're making new highs. Not going to happen. Pretty big selling right out of the gate. Almost fills the gap. Well, we eventually did fill the gap on this move, but lots of choppy back and forth trading. You can also see that the previous day, lots of selling and then big bounces, long candles both ways. That tells us that buyers and sellers are really paired off in here and they're waiting for the next market driving news. There is some good news. We are through the summer doldrums. We should start to see normal volume picking back up in maybe a week or so, and then we should kind of get back to business as usual. Traders take a lot of time off toward the end of August. Everyone does. So the trading desks are light, the volume is usually light, and then things start to gradually come back. I wouldn't be looking for that tomorrow, Tuesday. That's going to be a holiday hangover, and we'll gradually kind of get back into the swing of things. We've got ISM services coming out this week, so the economic releases are fairly light. We really got a big dose of those last week. They were in general quite good. China's PMI is something I've been watching. That came in at 51. That was better than expected. It's just slightly into expansion territory. China, I believe, is going to be a problem for global markets because their economy has been very slow to recover. And I'm also not seeing any kind of great growth out of Europe. The Fed is saying that they almost want to see some recessionary type economic releases to help them fight core inflation. Well, they could get that, and they could get that in the next couple of months. I think when we start seeing the first couple rounds of weak economic numbers, everyone's going to really worry that, uh-oh, the Fed overstepped their bounds. Yes, this could mean that they're going to stop tightening. Yes, they could even ease, but are their easing efforts going to stimulate economic growth, or are people genuinely cutting back on consumption? We're used to 0% interest rates. We've grown accustomed to that for almost 10 years. Now, when people are looking at their credit card statements and how much they're paying in interest expenses, they're going, oh my gosh, I have got to cut back my consumption. Big ticket item consumption is going to drop. The average new car loan is somewhere around $750 a month. Wow. Rent prices are still sky high. People not able to buy new homes because of the refinancing charges with higher interest rates. So we'll see what happens in here. As I said earlier, August and September tend to be seasonally weak periods of the year where these types of concerns really start to build. So am I bullish? Am I bearish? What am I going to do? How am I going to trade this? I'm going to give you a bullish pick and I'm going to give you a bearish pick. So here are the things that we need to be watching for this week. I would like to see, as a bullish trader, I would like to see at least 1 week day in here where we come down and test that 50-day moving average and it ends with a bullish hammer, a long tail under the body of that candle, similar to this. So it comes down and it tests that support level and rally, 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 rally all day long. That would tell me that buyers are aggressive at the 50-day moving average and that at least for a few days I can swing from the bullish side. So you had this long green candle here. We've been able to compress, been able to hold the gains, but we do need to see some advancement pretty soon because if we can't advance on this long green candle, it'll be a sign that sellers are persistent and they're interested up here and that we could roll over, have that double top, lower high, and then make a concerted effort to test that 100-day moving average in September. So if we come down and we test this 50-day moving average and we break it hard and we have a long red candle that closes on its low, then you got to be looking toward the bearish side with the expectations that we could come down and test this 435 level very quickly. That 100-day moving average would also be in play. So just need to watch and see what the price action is going to do for the next couple of days, because there are a couple of big scenarios that could happen. One is that we challenge the high. The other one is that we break below the 50-day moving average and we test that 100-day moving average. Gee, Pete, you've given us two dramatically different scenarios. How in the heck am I supposed to know what to do? I don't know what's going to happen. I'm just going to wait to see which of those two scenarios plays out. And I'm going to have a bullish pick ready and I'm going to have a bearish pick ready. So let's get to it. Let's use Option Stalker Pro. Let's find something that looks good to trade. I'm going to go into the primary screen here. And oh, I've got the bearish side queued up here as far as my searches. I'm looking at Pop Bear and specifically pop plus bear. What is pop plus bear? Well, pop bear is one of my favorite bearish swing trading searches, and it's looking for longer term breakdowns. Pop plus bear simply tells me that the stock was breaking down the day before, which would have been Thursday. And I like seeing those stocks because it's like a slap in the face. It's like, hey, I was a good looking trade on Thursday. I was a good looking short on Thursday. Here I am again on Friday, performing again. This is your second chance to notice me. And then if I don't do anything on it, then I may miss the opportunity, and that's okay too. But at least it gives me a second chance to see that a stock that to see a stock that looks fairly weak. And I've highlighted wing, and I like this pattern because as we zoom out, and you'll be able to see we've got a price compression right in here. So when the market has been in go, go, go mode, this is a daily chart, what has the stock done? Well, it had earnings in here and has been gradually drifting lower. Nothing dramatic, really just compressing. Test, 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 testing this support level. Now you can see from our automated trend lines, this is a fairly significant support level because we have a lot of trend lines coming into play there. You can see on a D1 basis that the orange line is below zero, so it's weak relative to the market. Here's a little tell right in here. You see how 1 vol, the blue line is above zero? That tells us that this is pretty decent price action, and it's been favoring the downside. So I like all of that, but what I really like, I need to zoom out on a longer term chart to see. And now I can start to see that there are some longer term trend lines that are coming into play. This is a really nice long term trend line right here. So this will be very important for us. And it comes into play probably at the 155 level or so. So this is all fine and dandy, and we're trying to break, 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 break all of these. These are low minus, low minus. This is a low plus. This is a low plus. We've got all these trend lines coming into play here, and that tells us that this is a natural support level because of all these trend lines. So how do we want to break these support levels? We want to break them with a long red candle, just like that one. So if we see a long red candle through this upward sloping trend line, and I think that that would be possible if we see a market breakdown below this 50-day moving average, then it goes to the 100-day moving average, and this stock, after breaking this upward sloping trend line, has a pretty easy path, maybe to 135. I see this as a really nice opportunity. The one thing I'll also say is that when I start looking at lists, I'm familiar with all the symbols. I don't have to be intimate with the company itself, but over time you learn what it is that the company actually does. And if I start going through this list visually and looking at it, I go, oh, well, Wing is in the restaurant business, and oh, there's Mondelez. That is a food producer. Oh, hey, there's General Mills. That's a food producer. Hey, there's Kellogg. That's a food producer. Keep going down. Oh, hey, look at that. There's Campbell's Soup. That's another food producer. Oh, look at that. There's ConAgra. There's Coca-Cola. You get the idea. Food and beverage stocks right now are fairly weak. And that also plays into a nice little breakdown here that we could see in the market. Why are food stocks weak? I don't know. I really don't care. Is it because inflation is going up and they can't recover their margins because they can't charge more for the product because people aren't paying for it? I don't know. I only know that that group right now is a little bit weak. This is a really nice compression, and we've got a potential breakdown here. We get a little help from the market. Doink! Should see that breakdown. Start testing that 100-day moving average. I think you're going to see this stock roll over. This could be a nice short swing trade, even that you could put on for a few days. You can see how it's below the 200-day, the 50-day, and the 100-day moving averages. WING. I like it if the SPY closes below the 50-day moving average and if the stock breaks below this long-term upward sloping trend line. Both conditions need to be met. So let's take a look and see what we've got on the bullish side. I'm going to go in, take a look at green royal flush, and it's nice because of the way that we have our columns set up right now. We can customize these and we can add variables to our columns so that at a glance we know exactly where we need to focus for opportunities. So on the bullish side, these are all buy signals on a 5-minute to a daily basis, and here we have strength versus the SPY on a 5-minute to a daily basis. Blue dots signifying heavy volume intraday and on a D1 basis. And so if I go down to the third stock, Caterpillar, I like it. The stock has a bullish flag formation. There's your flagpole right there. Stock broke out through horizontal resistance, was resistance, broke out on an earnings report before the open, long green candle, stock comes down, tests that breakout successfully, and now it has bounced along with the market. And it's challenging this downward sloping trend line. So let's zoom in, take a look at that. You can see there's your downward sloping trend line. There's your bullish flag. This stock should continue to break out. So when would I buy Caterpillar? I've already given you a little bit of an outline of what I'd be looking for on the bearish side. On the bullish side, I'm just looking for that nice test close to the 50-day moving average that results in what? That results in a bullish hammer like this. So sellers come in, whap, whap, whap. But by the middle of the day, buyers go, nope, we like it. And they buy it up because that bullish hammer will lead to another bullish candle and perhaps another that will challenge the high. So I'm looking for a little bit of weakness this week that gets supported with a nice bullish hammer like that. And then when I see that and Caterpillar is able to hold its own and it's still got good relative strength and excellent volume as it showed us last week, orange line above zero, relative strength above that downward sloping trend line, above all the major moving averages. This confirms that really nice bullish flag formation. And then I have a good market backdrop that also will fuel a move higher so that the stock can make a new 52-week high. That's how I'd be trading it, folks. I'm going to try and get my next video out Wednesday, and the holiday has kind of screwed us up a little bit, so We'll get back on track. My ideal presentations that I do for the videos would be to release them on Wednesday and then to do Sunday night videos as well. And that breaks them up so that the picks that I feature actually have a chance to play out for a little bit. Thanks so much for watching, everyone. We'll see you a little later this week. Good luck with your trading.